My name is Johannes Hesche. I am executive partner and head of the qualitative portfolio management here at ACATIS.
Please briefly explain the fund concept.
We created the ACATIS Value und Dividende for the slightly conservative equity investor. So that means the fund should have strong long-term capital appreciation, however, still have a slightly reduced risk profile compared to the overall stock market.
What distinguishes the ACATIS Value und Dividende from other dividend funds?
I think there's two things that differentiates our fund. First of all is by what we do. We only invest in companies with a very high quality business model that can appreciate over the long term. And secondly, by what we don't do. We don't invest in companies that are reliant on a single exogenous variable, such as oil companies that are dependent on the oil price in order to make good returns. We only want companies that can generate returns out of themselves.
What criteria do you use to select stocks for the fund?
For the selection criteria, I often think about two Munger quotes. The first is, a very good business at a fair price is superior to a mediocre business at a great price. And secondly, the big money is not in the buying or selling, but it's in the waiting. And when we employ these two criteria together, we get companies that we can hold for a very long time and they can appreciate over set periods of time and therefore generate good returns for you as our investors.
Why is a dividend a good criteria for selection?
The dividend is a good selection criteria because it speaks to the financial health of a company. If the dividend is paid out of the running cash flow of the company, continuously paid and increased over time. So basically, this means if a company fulfills these criteria, it speaks to the financial acumen of management and it speaks to the soundness of the business model over the long term.